Hello guys, good day. Welcome back to another video lecture in ACP 311 Accounting for Special Transactions. In this video lecture, we will be discussing sample practice problems in relation with partnership operations. So in this particular lecture, we will be answering some of the problems that computes net income and how are we going to distribute this net income to the different partners considering different assumptions and different arrangements in the partnership. So to start, we have our first problem. CCPPEA accountants agreed to form a partnership and to share profits in the ratio of 5:3:3. They also agreed that A is to be allowed a salary of 28,000 and that PP is to be guaranteed of 21,000 as his share of the profits. During the first year of operation, income from fees are 180,000 while expenses totaling 96,000. What amount of net income should be credited to each of the partners' capital? What's unique in this problem is that there is an agreed stipulation that partner P will be guaranteed of a 21,000 of his share in the profits. So meaning in no circumstance that partner P will be receiving part of the partnership net income less than 21,000. So that means if in our computation later on, the share of PP will be lesser than 21,000, then that means other partners or C and A will be giving additional income or additional profit to P, which will be credited to their respective shares in the net income. Okay, in the given we have income from fees of 180,000 and expenses of 96,000. So that gives us that gives the partnership a total net income of 84,000. So this 84,000 will be distributed to the partners based on the agreed ratio of 5:3:3. Okay, however, since there is a 28,000 salary to be given to A, then therefore we will be deducting the 28,000 first to 84, and then the remaining net income will be distributed based on the stipulated arbitrary ratio. So again, we will be giving A a salary of 28,000. So that means ang mabili na lang for part or to be distributed based on 5:3:3 will be 56,000. So that 56,000 will be distributed based on 5:3:3. So how are we going to compute? So for C, that will have or C will have 5 over 11 times 56,000, and then P will have 3 over 11 times 56,000 and 3 over 11 times 56,000. So asa gikan ang 11 is from 5 plus 3 plus 3. Okay, so based on the remaining net income, P will be receiving only 15,273. Therefore, it negates with the agreement of the partnership that P will be guaranteed of 21,000. So that means kailangan mag-abono ni A ug ni C to make sure that P will be receiving 21,000. So from that, C and A will be sharing or will be absorbing the 5,727 to which will be added as part of the net income that will be received by P. So we have 5,727 will be shared by C and A using their respective profit ratio. So C asa gikuha si 3,500 3,579.38, that is from 5 over 8 because ang ratio ni C is 5, ang ratio ni A is 3. So that's 8. So para ma-compute nato si 3,579.38, so that's 5 over 8 times 5,727, and para kay A, that is 3 over 8 times 5,727. So after that, CC will now be receiving 21,875.63. P will now be guaranteed again and will be receiving 21,000, and A will be receiving 41,125. So for a total of 84,000. So kaning piso is this is just due to rounding off of figures here. And for your information, this 5,727, which is given to P as an additional income, will not be considered as an expense in order not to distort the actual net income of the partnership. But rather, this additional income given to P will be absorbed by partners C and partner A. Next question. The partnership contract for the Anthony and Davis partnership provided that Anthony is to receive an annual salary of 120,000 and Davis for 80,000, and the remaining profit or loss is to be divided equally. Net income of the partnership for the year ended December 31, 2019 was 180,000. So the closing entry is a debit to income summary for 180,000 and credit to Anthony Capital and Davis Capital respectively of how much. So in short, it is asking for the total profit to be credited to Anthony and Davis. So again, since we have a salary here, so again, salary will be given first to the partners and the balance in the partnership net income will be distributed equally as per agreement of the partnership. So again, Anthony will be receiving 120,000 and Davis will be receiving 80,000. However, the total annual salary of both the partners already exceeds the total net income of the partnership, which is only 180,000. So therefore, the 20,000 which is considered as the loss or which is considered as deficit will be shared by Anthony and Davis equally. So therefore, in total, Anthony Capital and Davis Capital will be credited only by 110,000 and 70,000 respectively. So journal entry would include debit income summary of 180,000, credit to Anthony Capital for 110,000 and Davis Capital for 70,000. Okay, let's proceed to another problem. The problem includes Black and Panther formed a partnership on January 1, 2019, with Black contributing 16,000 cash and Panther contributing equipment with a book value of 6,400 and fair value of 48, and inventory items with book value of 24 and fair value of 3,200. During 2019, Black made additional investment of 1,600 on April 1 and 1,600 on June 1. And on September 1, he withdrew 4,000 pesos. Panther had no other investments nor withdrawal during the year. The partnership net income was 150,000 and was agreed to be distributed based on its weighted average capital balances. The question is, how much is Black's share in the net income? So again, this problem will help us establish concepts on how are we going to distribute the partnership profits. So in this particular problem, it is agreed by the partners that the net income will be distributed based on its weighted average balance. So in our previous discussion, we have discussed two ways on how are we going to compute for the weighted average. However, I have told you that it is for me it is suggested to use the alternative one because I suppose that it is easier. It is the easier way of computing for your weighted average. However, it is on your choice on which option you will be using. So again here, the 150 net income will be distributed to Black and Panther using its weighted average. So in order for us to compute for the net income to be distributed to each of the partner, it's prerequisite for us first to compute for the average capital balance. Okay, let's start with computing the capital balance of Black. So we have here beginning balance on January 1. So you have there 16,000. On April 1, it has an additional investment of 1.6 as well as on June 1, and it had a withdrawal of 4,000 on September 1. So again, under this method, you just simply multiply the investment or the withdrawal and multiply it to the number of months this withdrawal or this investment is being outstanding for the capital of particular partner. So in this case, ang atong gina-compute is kay Black. So again, diri you just have 16,000 times 12 over 12, 1/6 times 9 over 12, 1/6 times 7 over 12, and 4,000 times 4 over 12. And since it is a withdrawal, this should be deducted. So to compute, uh, in short, the weighted average of Black partner is 16,800. On the other hand, Panther only has an investment of 8,000 with no further additional investment and withdrawal. So this investment of 8,000 is from 48 plus 32, which is again both the fair value of all its non-cash assets invested in the partnership. Okay, so from that you will have 8,000 times 12 over 12. So that gives you or that gives Panther a total weighted average of still 8,000. So from that, we already computed the weighted average, and then we can now use this as our basis in distributing our net profit of 150. So to compute sa share ni Black, you will just have 150,000 times 16,800 over 24,800. Asa tagikan og 24,800 diri sa total weighted average capital balances of both Black and Panther. So again, from that computation, Black will be receiving 101,612.90 and Panther, on the other hand, will be receiving 48,387.10 with a total of 150,000. Okay, a journal entry to distribute the profit of each partner will include debit to income summary for 150,000, credit to Black Capital for 101,612.90, and another credit to Panther Capital for 48,387.10. Let's proceed to another problem. JPIA, Jaat, and Daisas are partners in DAI partnership. Their capital account balances at December 31, 2019 were 90,000, 110,000, and 50,000 respectively. They share profits in 4:4:2 ratio after the following terms. First, Dices is to receive a bonus of 10% based on the net income after bonus. Another interest of 10% shall be paid on that portion of partner's capital in excess of 100,000. So that means those partners with a capital of more than 100,000 will be given 10% interest in excess of 100,000. So from our partners JP at Jaat and Dices, it's only Jaat ang naay capital na more than 110,000. So in excess of 100, so that's 10,000, multiply it by 10%. So interest will be given kay Jaat will be 1,000. So later on we will account that. And letter C, salaries of 10,000 and 12,000 shall be paid to partners JPIA and Dices respectively. So in this problem, we are tasked to compute for the net income of the partnership, or no, we are tasked to compute the profit share of the Dices if the income of the partnership was 44,000. Again, based on our discussion before we could compute for the total share of the partnership before we could compute for the share of each partner in the partnership net income, if there are allowances for bonus, interest, and salaries, we need to give it first to the partners, and the remaining net income will be distributed according to the agreement stipulated in the partnership. So let's distribute first bonus, interest, and salaries to all of the partners. So let's start with the bonus of DISAS. So bonus is 10% of net income after bonus. So we have four types of bonus and four ways of computing for bonus. So you can revisit the formula in computing for bonus in several ways sa ato ang previous discussion. But in this particular problem, ang ato ang bonus is net income after bonus. So therefore, to compute for your bonus, you will just have net profit before salaries, interest, and bonus, which is 44,000. Net profit before salaries, interest, and bonus of 44,000, and net profit after bonus net, which is 40,000. So that's 44,000 over 110%. So you have 40,000. So in short, your total bonus is 4,000. So this 4,000 will be given to DISAS. Another is interest to sorry, bonus to DISAS. CJ is DISAS. This is bonus to DISAS. Another is interest to JAAT. So again, ang atong stipulation is in excess of 100,000. As what I have mentioned earlier, it's only JAAT ang na-excess. So na-excess nga 10,000, multiply it by 10%. So JAAT will be given an interest of 1,000. And lastly, JPIA and DISAS will be given 10,000 and 12,000 respectively nga salaries. So in short, we have 4,000 plus 1,000 plus 22,000. So that is a total of 27,000. So pila na lang nabilin sa ato ang net income? 44,000 minus 27,000 nga bonus, interest, and salaries. Then, na lang tayo nabilin nga 17,000 to be distributed to the partners using this agreed stipulation, which is 4 is to 4 is to 2. So from that, pwede ra nato siya i-diretso og multiply og 40%, 40% og 20% kay ano man ang total ani niya 10 or 100%. But again, reminder nga basta dili ni siya mo total og 10 or dili ni mo total og 100%, you need to have a fraction on it. So, para sure ta, i-fraction nato, ang share ni JP will be 4 over 10 times 17,000. Kay Jaat will have 4 over 10 times 17,000. And for Daisas, will have 2 over 10 times 17,000. So, in total, JP will be receiving 16,800, Jaat will be receiving 7,800, and Daisas will be receiving 9,400. So that's how 44,000 will be divided among the three partners of the partnership. Here's another problem. Tony and Jane are partners with capitals of 200 and 120,000 respectively. The partnership agreement provided the following. So first, 10% interest on their capital investment. B, annual salary of 36,000 to Tony. And remainder will be given to Tony and Jane for 60 and 40 issue. The question is, what is the profit to be earned by the partnership before charges for interest, salary, and the balance so that Jane will receive 40,000 in the remainder of the profit after salary and interest. So this problem is quite interesting because it is not the conventional way of asking. It's not a conventional way of question because the usual ones is that we will be computing for the share of the partnership rather than the partnership net income. So in this case, we will be working back to compute for the total partnership of the income. So again, we have there 40,000 income to be received by um 40,000 income to be received by Jane. So take note that Jane will be receiving 40,000 for 40%. So therefore, to compute for the 100% of the remainder, you'll have to divide it by 40%. So 40,000 divide 40%, so you'll have 100,000. So meaning this will be the 100% of the net income after provision for allowances in interest and salary. Okay? So this is the income after interest and after salary. So therefore, to compute for the total partnership income, we just need to add back the interest and the salary. So Tony will be receiving 10% of its capital balance. So we have 20,000, and Jane will be receiving 120,000 times 10%. So you have 12,000. So total interest of both partners will have 32,000 in figure. And then add back salary of Tony, which is 36,000. So therefore, the partnership should earn 168,000 in order for Jane to receive a net income after interest and after salary of 40,000. So from ano siya from the partner's share in the partnership profit to the partnership profit again. Again ha, from ang computation nato diri is gikan sa net income of the partners net income per partner to the partnership share. Mali. From the partnership from the partner's share of net income to the partnership net income. Kaya ang usual man nato nga gina-compute is gikan kay partnership income to partnership share. So diri pabaliktad. Gikan ta ang atong solving gikan sa partnership nga partners net income padulong kay partnership net income. Okay, let's proceed with another problem. So this time it is about bonus. So Peter and Paul formed a partnership on January 2, 2019 and agreed to share net income and losses of 90 and 10% respectively. Peter invested no assets but had a specialized expertise and managed the firm full time. So the contract provided the following. First, partners' capital accounts are to be credited annually with interest of 5% of beginning capital account balances. Paul is to be paid a salary of 10,000 per month, and Paul will also be receiving a bonus of 20% before salaries, interest, and bonus. And lastly, bonus, interest, and salary is considered as expense. Take note, guys, that we have two ways on how are we going to account for bonus, interest, and salary. First, and the most common way of accounting bonus, interest, and salary is that it is to be accounted as part of your net income distribution scheme rather than as a salary. But however, you can also recognize bonus, interest, and salary as an expense as long as you will adjust properly the net income of the partnership. We also have additional data, revenue. So we have a total revenue of 964,500 and expenses which includes salaries, interest, and bonus for 497,000. So that gives us a total net income of 467,500. So what is asked is Paul's bonus on 2019. So how are we going to compute for Paul's bonus on 2019? So before we could compute for the bonus, we need to compute first the net income of the partnership or the true net income of the partnership, excluding the salary, interest, and bonus as an expense. So from here, we have a net income of 467,500. Since we account bonus, interest, and salary as an expense, we need to add back to compute the true net income of the partnership. So we add back our first is interest. So interest of 250,000 times 5%, so that's 12,500, and the salary of 10,000 times 12. So 10,000 times 12 because there are 12 months in a year. So therefore, total salary and interest is 132,500. So therefore, for the true income of the partnership before bonus is 467,500 and 132,000. So that is 600,000. So since the bonus man daw is 20% before salaries, interest, and bonus, so ano na siya? You divide it by 80%. So 600 divide 80%. So therefore, ang imong total net income before interest, salaries, and bonus is 750,000. So you just compare these two, your net income after bonus, so 600,000, and then your net income before bonus. So to compute for your net income before bonus, so you have 600,000 divide 80%, so that's 750,000. So in short, Paul's bonus will be 150,000. Okay, let's proceed to another problem. Kyle and Alex co-share profits after the provision of annual salary allowances of 14,400 and 13,200 respectively in the ratio of 3:2. However, if partnership's net income is insufficient to provide for said allowances in full amount, the net income shall be divided equally between the partners. In 2019, however, the following errors were discovered. So we have this depreciation for 2019 is understated by 2.1. The inventory on December 31, 2019 is overstated by 11,400 as well. And the partnership net income for 2019 was reported to be 19,500. So from that, the capital accounts of the partners should be increased or decreased by how much? So this increase and decrease, this is due to the errors that were erroneously this is from the errors that was indicated in the current books or in the books in computing for the current net income. So again, to compute for the adjustment, we need to compute also the adjusted net income. Okay? The adjusted net income. So we have here net income per books of 19,500, and then we have two errors man. Understatement of depreciation daw. So understatement of depreciation, so that means your expense is understated, therefore your income is overstated. So to adjust that, you need to deduct 2.1. And then overstatement of inventory or overstatement of ending inventory. So overstatement of your inventory gives you also an an overstatement of your net income. So therefore, to adjust, you need to deduct 11,400 to your net income per books. So to compute, you have 19,500 minus 21 minus 11,400. So ang imong adjusted net income will be 6,000. But the ones you have distributed was based on 19,500. So therefore, from 19,500, which you have distributed equally of 9,750 and 9,750 each, there is an adjustment of 3,000 per per partner because your adjustment or your adjusted net income is only 6,000. So you adjust your net income to 6,000. So therefore, ang required lang dapat na net income to be distributed is 6,000. So dapat ang imuhang ibahinon sa mga partner is only 6,000 pero ang imong gibahin is 19,500. So meaning overstated ang imong gidistribute nga profit kaysa sa actual. So kailangan nimo mag-adjust and it requires a decrease kay nanubra man ang imong gi-distribute Instead of basing it sa 6,000, nag-base ka kay 19,500. So, to compute, you have 9,750 less 3,000. So, Kyle and Alex will be um, requiring a decrease in capital of 6,750 each for a total of 13,500. Okay, let's proceed to our last problem. This problem is a comprehensive one. It um, includes all possible na mga circumstance that could happen in a problem. So this one, on January 2, 2018, JM Partnership begins its operations with the following. So J with 80,000 and M of 40,000 na capital. According to the partnership agreement, all profits will be distributed as follows. So J will be allowed a monthly salary of 8,000 with 4,000 assigned to Tom. Another, partners will be allowed with interest equal to 10% of the capital balance as of the first day of the year. So meaning there will be an interest of 10% based on beginning capital. Letter C, J will be allowed a bonus of 10% of the net income after bonus. So meaning this is net income before interest, before salaries, but after bonus. And letter D, the remainder will be divided on the basis of the beginning capital for the first year and equally for the second year. So take note of that, beginning for the first year and then equally for the second year. Each partner is allowed to withdraw up to 4,000 a year. And partner operations results in a loss of 6,000 and 22,000 respectively in 2019. Each partner withdraws the maximum amount each year. Compute for the balance of J on December 31, 2018 and 2019 respectively. Okay, we will be computing the capital balances of J and M, but in this problem, the problem is only asking for J, but for comparison purposes, we will be computing J and M. Take note, guys, that it includes computation of 2 years, 2018 and 2019, okay? And very important note that we have loss here for the first year, and then profit in 2019, which is 22,000. So, since loss man, red flag na dayon diri si bonus. Because, what's in the rule, if there's a loss, no bonus will be given. No loss will be given. But however, pwede makahatag gihapon og um, salary and interest even if it's loss. Ang dili lang pwede is si bonus. Okay, so let's have this one. Okay, so we have J and M beginning balance of 72,000 of 30 and 34,000 on January 1 for a while. I think this is not for okay here 2018. So let's start first with beginning balance for 2018 of 80,000 and 40,000 respectively. So let's give them their annual salary. So J will be given 8,000 for 12 months and M will be given 4,000 for 12 months. So J will be having 96 and 48,000 respectively for their salaries. And then you have their interest also based on their beginning capital. So 80 times 10% para kay J, and then M 40,000 times 10%. So that's 8 plus 4. So we have a total interest of 12,000. So according to the rule earlier, that any remainder in the profit or loss will be divided based on their beginning capital for the first year. So therefore, pila man ang nabilin. Since we have a loss here in 2018, so we'll have the loss of 6,000 minus the annual salary of 44 minus 12,000. So therefore, we will be sharing a total loss of 162,000. And this 162,000, asa gani inigikan si 162,000? This is from 144 plus 12 plus 6,000. So that will be distributed based on 8 is to 4 or 80 and 40 respectively. So 162 times 8 over 12, so that's 108,000. And then for M, we'll have 162,000 times 4 over 12. So therefore, ang total na loss na i-absorb ni J and M will be 108,000 and 54,000 respectively. So therefore, ang total will be total share in the loss of the partnership will be 4,000 for J and 2,000 for M. However, again, take note that this loss, ang effect aning loss is a deduction to its capital. So, mugamay ang iyang capital balance. So, 80,000 minus 4. So, we have 76,000. And for M, 40,000 minus 38,000. 40,000 minus 2,000, 38,000 na lang. Take note guys, wala na nato gi-appeal og account diri as si bonus because loss man. Dili mag-distribute og bonus kapag loss. And it is also stipulated that gi-max out ni partners ang pag-withdraw of 4,000 each. So therefore, aside from loss nga 4,000 ug 2,000, they will also be deducted. Their respective capital will also be deducted by 4,000. So therefore, ang capital balance at December 31, 2018 will be 72,000 and 34,000 respectively, both by J and M. So these 72,000 and 34,000 will automatically become the beginning balance for the next accounting period. So for 2019, that 72 and 34 again automatic becomes the beginning balance for 2019. So same process here, but in this case, instead of loss in 2019, we already earned a profit. So let's distribute first the salary, bonus, and the interest to the partners. So same stipulation, 8,000 will be given to J per month and 4,000 for M per month. So that's 96,000 and 48,000 respectively. And then 10% interest on beginning capital. So beginning capital na on this year. So we have 72,000 for J and 34,000 for M. So that's why we have 72,000 times 10% and 34,000 times 10%. And lastly, since the partnership has already earned a profit, we can now give bonus to J. And again, your bonus is based on net profit after bonus. So to compute net profit after bonus, you'll just have the total profit of 22,000 divide 1 plus bonus rate of 110,000. So that is 2,000 ang bonus for J. So, pila tanan ang remaining, pila na lang ang nabilin nga remaining profit. So to compute, you'll have 22,000 nga profit minus 144 nga salary, 10,000 nga interest minus bonus nga 2,000. So that's a total of 134,600. So it's a loss of 134,600. Then this 134,600 daw will be distributed to J and M. This time, since it's already the second year, it will be distributed equally. Since it is stipulated in the problem earlier na sa first year, it will be distributed, the remaining profit or loss will be distributed based on the beginning capital. Pero pagka second year, it will be distributed equally na. So therefore, kaning 134,600 will be distributed equally. So 134 divided 2, 67,300 will be absorbed by J and M. So therefore, ang total share in the net income of 22,000 this year ni J will be 37,900. However, unfortunately, mag-absorb og loss si M nga a total of 15,900. Kay 22,000 lang man ang profit for this year. And then less drawings na 4,000 since naa may 4,000 nga gimax out nga withdrawal si J&M for the year 2019. So in total, ang capital balance ni J&M for 12/31/19 is 105,900 and 14,104 M for a total of 400,000 nga capital balance. However, in the problem, ang gipangutana lang is ang capital balance ni J. So therefore, we can actually solve lang para kay J. So ang answer will be 72,000 and 105,900. So tip in answering during exams, kung kinsa lang ang gipangutana, for example, in this case, ang gipangutana lang is si J, pwede ra nga dili na nato i-appeal ang M. Pwede na nato dili mag-total to save time. Pero again, for this particular problem, since this is for discussion purposes, we have shown also the solution in computing for the capital balance of M for 2018 and 2019 respectively. Okay? I think that's the end of our lecture on sample problems in partnership operation. So if you have more queries and clarification, again, based on our agreement, you may contact, you can send a personal message on my messenger account, or you can address that concern through our group chat. That's it for this time. See you on our next video lecture. Goodbye!